Welcome at forextrading.com. Let's see some triangles pattern examples. Right now we are looking at 5-minute euro dollar chart. It is a little bit squeezed because I want to see as many candles as possible just to show you some shapes on the price chart action. You see, some moments the price action candlesticks are shaping the patterns which look like exactly like triangles. And those are different triangles and they can be really various. So let's take a look at few examples how it can look like. This, for example, is different shape than this one from before. And we can find as many as we can at different charts. And those, for example, at 5-minute chart might be visible at 15-minute chart. And those on 15-minute chart can be visible at 30-minute charts. So we can look for a few of them just to show you how do they look like. But there are many questions asked about patterns and how to use them. So first thing first, first thing is you have to find a nice shape. More beautiful, I mean more candles are making the pattern, more power it's having for the future move. So it's the first thing. Second thing is, some websites and some traders recognize some kind of patterns, I mean triangles or wedges or rectangles, channels, whatever patterns you choose. Some of them recognize part of these patterns as continuation patterns or denial patterns. So you can meet this kind of point of view, but I don't really question if pattern is a continuation pattern or it's going to move in opposite way than that trend is growing or going down right now. So of course, some of these patterns are exceptionally telling us that we gonna, for example, from this move, this pattern didn't really tell us we're gonna continue, but we could. So it's not up to us to say if this pattern is going to shoot up in the sky or continue to fall as the price narrowed down in this triangle pattern. But there will be occasion from time to time you see different kind of pattern that will tell us with a bigger probability that we might continue an uptrend movement for a continuation of this move right here. But most of the time I prefer not to speculate. I prefer to be shown by the pattern where he wants to go. So if he wants to go up with some kind of great demand, it's okay with me. If the price moving downwards very fast, it's also fine. So I'm gonna take a chance and join those suppliers, those sellers here at the market to make the right move. I'm not gonna say if this pattern is a continuation pattern of future growth or it's a downtrend pattern. So most of the time it's really worth to stay impartial. I mean, not to take any trade with some specific consideration or of a price going up or down. I just like to see what's the price action is showing to us. So I treat patterns with respect and I treat them as they were a kind of consolidation, which they actually are in some moments. You see, this move right here, up movement, was made by few candles and we see many candles in this triangle and narrowing down. So it was kind of consolidation for me that if price will break out from consolidation, it might accelerate, and this what happened here after breaking out to the downside from this pattern of triangle. It's also different ways to look at the chart. You see here we could, for example, match the smaller triangle to this pattern, and it would be also very important. Even though we see there is also a big one here visible at this 5-minute chart. So there are different triangles seen at the same chart. So if you're speaking about some particular pattern with somebody else looking at different chart, make sure you are talking about the same size of triangle, even though you're looking at the same moment at the chart. Now we can switch to medium term view, which is 4 hour chart, and we can see those patterns I've matched at 5 minute chart are very small here, so we can delete them. And we can look also for much bigger patterns seen at 4 hour charts. And the difference between them, for example, between 5 minute triangle and 4 hour triangle seen at this kind of chart, is that they are making a bigger movement. As on 5 minute chart, we can see, for example, 20, 30 pips movement from this kind of pattern. At 4 hour chart, we can see 100, 200, 300 pips movement from this kind of triangle consolidation, as we see here, for example. So this pattern actually could go to the downside and accelerate fast after reaching some support resistance and breaking out to the downside, or we could go to the upside. And that's really what price action showed us, that we are moving very fast from these consolidation moments to the upside with less buyers, strong buyers coming in to the market. So the trend, really medium trend, is growing right now at this point. But let's take a look at different example of triangles. There are really a lot of them. We can find big triangles like I've just showed you at this chart, or this one as well is maybe even bigger than shown before. But we can also find a lot of small triangles at the chart. So I can tell you this little thing right here is also a triangle, a small continuation triangle. If we zoom this chart right here and take a look at it at a 30-minute or 15-minute chart, we would see a big kind of pattern at half of the screen probably, because those little candles are zoom out right now, and this is 4 hour chart. And if we take a look at 30-minute chart, it would be a pretty much bigger pattern that it's looked like at this kind of chart. Here, for example, I can see even a bigger kind of triangle, changing the trend triangle. There are different kind of triangles, and you can mark them at the chart and try to call them somehow, or let them teach you what kind of movement we can expect from this kind of behavior. For example, when the price action is going down aggressively, then we have kind of triangle consolidation, and prices taking higher and higher lows, and narrow down as well at the same time. And we see pretty much clear that the beautiful shootout from the consolidation triangle pattern gave us a nice a few pips or a few hundred pips movement at this chart. We are talking about 160 sorry 1600 pips movement. So please remember the most important thing: let the patterns teach you how the market is really responding to those patterns, candlestick patterns. Some of them might go long positions after this kind of pattern, some of them might go short. It's up to the market, but you can observe and learn each time the pattern occurs at the market. So as an conclusion, I want to tell you that pattern itself doesn't really tell about the next future direction or even the strength. We can expect from big consolidation like here at this triangle that the next future movement to the downside or upside like it happened here might be big, because of the size of this pattern was big as well. But the direction and strength of the movement is very much important, depending on buyers coming in and how strong do they are, or sellers coming into the market, which would be a continuation in this example, but it didn't happen. So I'm saying the most important is still trend, or trend changing, like in this particular example, the trend has been changing because of this major big continuation, triangle pattern. And also important is price action, which is saying everything exactly about buyers coming into the market. I mean, strong buyers in this example with little breaths and another big demand at the market in that time. So thank you very much for listening, and I hope you have a lot of fun with finding those small and bigger patterns at different time frames, different instruments. Thank you.